Hello everybody, what's going on? Few important updates are coming from NIO. Wall Street is heavily divided on this Chinese EV maker. But if you look past the headline noise, major institutions like Morgan Stanley are making massive moves. Today we are breaking down the Q2 institutional positioning, local market dominance, delivery figures, and brand momentum to evaluate where NIO stock is headed. Let's start with the institutional shift. The recent 13F filling for the second quarter revealed a stark split among major hedge funds and investment banks. On one hand, firms like DE Shaw slashes their holding by over 50%, selling 20.12 million shares, while JP Morgan continued a multi-quarter unwind, reducing its position by roughly 79%. However, who bought those shares tells a very different story. Morgan Stanley aggressively stepped in, increasing its stake in NIO by 86% during Q2. And they were not alone. UBS expanded its position by 56% to over 19 million shares. Bank of America added nearly 4.8 million shares. And funds like Susquehanna and Millennium Management multiplied their stake significantly. In total, top institution buyers added 36 million shares. While 67 funds completely exited, 66 brand new institutional investors opened positions totaling 10.58 million shares. That resulted in institutional holder being net buyers of 2.48 millions new shares overall. Smart money is taking a calculated risk and accumulating shares at these valuation. So the big question here is that why Morgan Stanley placing such a heavy bet? Look at what is happening on the ground in China. Hefei, the provincial capital of Anhui and manufacturing hub that rescued NIO with 1.03 billion bailout during its 2020 liquidity crisis, is seeing unprecedented market dominance by NIO. Retail data for July shows NIO led Hefei's passenger vehicle market overall and ranked number one in cumulative sales across the region from January through July. Even more impressive, NIO topped an high premium vehicle segment, beating out legacy German luxury titans like BMW, Mercedes Benz, and Audi. Zooming into the large SUV segment in Hefei for July, NIO's manufactured vehicle dominated completely. The ES8, ES9, Onvo L80, and Onvo L90 claimed all four top positions, collectively commanding over 60% of the entire large SUV market share in that region. The flagship ES8 held its position as the best selling model, priced above 400,000 yuan in Hefei for its ninth consecutive month. This regional dominance highlights a key fundamental truth. Where NIO built its ecosystem and infrastructure density, it doesn't just compete with traditional luxury OEMs, it completely outperforms them. Beyond localized success, NIO's broader operation metrics shows strong acceleration in Q2 total. Deliveries across the main NIO brand, Onvo and the Firefly hit 107,000 vehicles, a 49% increase year over year. That momentum accelerated further into July, with group wide deliveries reaching 35,900 units, up 71% year over year. Cumulative deliveries for the year reached 200 vehicles through July, marking a 68% jump compared to the same period prior. A major catalyst behind these numbers is the multi-brand strategy working as intended. The core luxury new marked deliveries over 20,000 units in July. The mass market Onvo sub-brand contributed 10,155 units, and the compact boutique Firefly brand delivered 5,771 units, up 143%. Individual model milestone further validate this execution. The new generation ES8 reached 130,000 deliveries on July 22nd, just 300 days after its launch, and hit 140,000 milestone shortly after, maintaining a delivery cadence of roughly 10,000 units per month. While Onvo L90 celebrated its first anniversary by crossing 60,000 total deliveries, cementing its position as the top selling pure electric large SUV in the 300,000 yuan category. So the big question here is that what does all this mean for the investors looking at new stock? Short-term volatility and headline sentiment have created significant noise, leading some fund to step aside. However, Wall Street heavyweights like Morgan Stanley are taking advantage of this price disconnect to build large long-term positions. That is the reason why I would say that NIO is no longer just a single luxury EV relying on a narrow customer base. With the tri-brand lineup of NIO, Onvo, and the Firefly firing on all cylinders, the company is capturing market share across luxury family and entry level premium EV segments simultaneously, combining 70% plus delivery growth market share dominance over legacy European luxury rivals in key market. For long-term investors willing to look past short-term market fluctuations, institutional accumulation by tier 1 investment banks provides a compelling vote of confidence. The operational trajectory is turning no doubt. Delivery volume is expanding rapidly, and NIO is proving it can win in the luxury EV market as well. Here, I would say that this is just the early indication. I believe very soon NIO is going to dominate the luxury EV market all over the world, and it will leave these German giants like BMW and Mercedes way behind in the international market as well. So prepare now. With that said, thank you so much for being here. See you next one.